Hey everyone, welcome back to Corporate Decoder, the place where we break down complex corporate filings and find the hidden gems or the red flags within them. Today we are diving into a current report from Archer-Daniels-Midland Co, or ADM, as many of you might know them. This report is about a significant move they are making in their animal nutrition business, so let's see what that really means for the company. Alright, so Archer-Daniels-Midland, known for its food processing and agriculture commodities, has just announced a pretty big partnership. They are joining forces to create a new company focused on animal feed with a company called Alltech. This isn't just a small deal, it's about restructuring their entire animal nutrition business. So basically ADM wants to move away from just selling animal feed and focus more on those fancy high profit specialty ingredients that go into animal food. Think of it like this: instead of selling raw flour, they want to sell the specialized dough mixes that make a bakery's bread unique. They believe this shift will lead to higher profits. Now, this new joint venture will be mostly owned by Alltech. Alltech is also bringing its own animal feed businesses in the US and Canada to the table, which includes quite a few feed mills. ADM is contributing its own US feed mills to this new partnership. The idea is that by deconsolidating this part of the business, meaning they won't fully own or control it anymore, ADM can focus its resources elsewhere. They plan to still have a hand in supplying specialty ingredients to this new venture, so they are not completely out of the picture. This deal is expected to be finalized, and the new company will officially start operating in the first few months of 2026. Importantly for ADM, they don't see this deal changing their financial results significantly for 2025. This suggests the current financial health of ADM, as reported in other filings, remains relatively stable as they navigate this transition. Let us quickly look at what ADM has publicly traded. They have their common stock, which is traded on the NYSE under the ticker symbol. ADM also have some notes due in 2025, which are also listed on the NYSE. These notes represent money they have borrowed that needs to be paid back. The fact that some of these notes are due in 2025 might be something to watch, as they are being renegotiated or paid off. This move with Alltech is part of a bigger plan for ADM to really streamline what they do and get rid of anything that's not adding enough value. By simplifying their animal nutrition business, they can put more effort into developing new and innovative products that customers really want. This means they are investing more in research and development to stay ahead of the curve in the nutrition space. Now, like any big corporate announcement, this report comes with a lot of language about future expectations. They use terms like forward-looking statements. This basically means they are talking about what they believe will happen in the future. For example, they think the joint venture will be successful and that their strategy will pay off with higher profits. However, and this is a very big however, they also warn that things might not go exactly as planned. They list a whole bunch of potential problems. These include not getting the necessary government approvals for the deal to go through. They also worry about whether they and Alltech can actually work well together and make this new company a success. There is also the risk that they might not be able to find or keep the right employees for the new company. And of course, they mention general business risks like changes in the agricultural markets and the overall economy. They even point to other reports for more detailed risks. This is standard stuff, but it's a good reminder that these deals are never guaranteed. The main document accompanying this report is a press release from the 23rd of September 2025. This is where they flesh out the details of the joint venture announcement. It contains all the information we have discussed about the partnership with Alltech, the strategic shift towards specialty ingredients, and the expected completion timeline. Looking at this filing from an outsider's perspective, it seems like ADM is making a calculated move to improve its profitability. The animal nutrition market can be competitive and shifting towards higher value specialty products is a smart strategy if executed well. They are essentially betting that by partnering with Alltech and restructuring, they can unlock more value from this segment of their business. The risks they highlight are very real. Success depends heavily on how well Alltech and ADM integrate their operations, and if they can truly innovate in the specialty ingredient space. The agricultural commodities market is also notoriously volatile, and any global economic downturn could impact demand for animal feed products. The fact that ADM is selling a majority stake to Alltech indicates they see Alltech as a better equipped partner to manage the day-to-day operations of the feed business going forward, while ADM focuses on its specialty ingredients, R&D. My take on this is that ADM is trying to evolve its business model to chase higher margins, which is a good long-term goal. The next few years will tell if this joint venture is the right path. Investors should keep an eye on how the new entity performs, and if ADM can successfully leverage its R&D to create those sought after specialty ingredients. The overall direction seems positive, focused on growth and efficiency, but execution will be key. Alright, that is our breakdown of Archer-Daniels-Midland's latest filing. What is your take on this partnership and what it means for the future of ADM? Drop your thoughts in the comments below. If you found this analysis helpful, hit that like button and subscribe for more corporate deconstructions. And don't forget to join our Discord community, linked in the description for more discussions and insights. Thanks for watching, see you next time.